Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with US consumers pushing back the likelihood the US Fed will cut its policy rate anytime soon. Financial markets now price in only 2 cuts this year, one in September and one in December, and far less than the 4 priced in at the start of the year. And the conviction for these scaled back indications is easing rather fast. The latest pricing suggested the September one might still happen, but there is more of a chance that December one will be skipped. And that is because American retail sales posted impressive results in March, and February's results were revised sharply higher. Those revisions mean they were up 2.1% in February from a year ago and up 4% in March on the same basis. Consumer spending belies consumer sentiment. What they do is way more positive than what they say. On this data, the US dollar rose yet again, bond yields jumped again, and equity prices packed a sad that they're unlikely to get the rate cuts that they were banking on. And Canada reported manufacturing gains in February from January, and even small gains from a year ago levels. Those gains, tiny as they are, also came out when inflation adjusted. In Japan, machinery orders jumped 7.7% in February from January, reversing the 0.7% fall in January and far exceeding market expectations for just a 0.8% gain. That put them a healthy 9.4% higher than year-ago levels. And in the EU, industrial production rose again in February, making it the third rise in the past 4 months. And we should also note that the rise of the aluminium price over the past 8 weeks, and that took a sharp turn higher yesterday, taking it back to June 2022 levels. This shift is largely due to sanctions biting on Russian supplies. The US Treasury 10-year yield is now at 4.63% and up 11 basis points from yesterday, and the price of gold will start today higher by $20 at $2,363 an ounce. And despite continuing Middle East tensions and uncertainties, oil prices have slipped 50 US cents overnight to $84.50 a barrel in the US, while the international Brent price is unchanged at $89.50 a barrel. And the Kiwi dollar starts today at just over 59.1 US cents out and down 20 basis points from yesterday and a 5-month low. Against the Aussie, we're also down 20 basis points at 91.7 Australian cents. Against the euro, we're down 20 basis points too at 55.6 euro cents. And that all means our trade-weighted index starts today at just under 69 and down its own 20 basis points, and that's only a 10-day low though. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.